Thank you, and good morning. I don't know about you guys, but it's been a very enlightening and inspiring 2 days, and by the sunshine outside, it's turned up, right? We weren't sure after Monday's storm, but it's been wonderful to see the private and public sector really come together at this conference and have a dialogue about this incredibly important topic of our time and pressing topic. And as Diana Taylor kicked off the conference on Monday, she said, you know, financial inclusion is about building a better life. And I don't think we could say that, you could say that any better for the 2.5 billion, I think that's the number that we've talked about when it comes to financial inclusion. So far, I feel like we've had a lot of big picture perspective, and now we're here to really get into a deep dive of what is arguably the biggest market in the world, India. And I don't think we could have arranged a better group of people to talk about it. So let me go ahead and introduce everybody. First up, we have Veena Mankar. She is part of the ASEAN network, and she brings 30 years of banking experience, and she's now focused on the bottom of the pyramid to build a scalable model for the urban microfinance under the name, and this is my favorite part, under the name Swadhaar. And for those of you that don't understand Hindi, that the translation means self-support. So welcome, Veena. We're looking forward to your down in the trenches point of view. Up next, we have Alok Prasad, another veteran banker and a former Citigroup person, like so many Citi people, alums that are engaged at this conference this week. And he's the CEO of Microfinance Institution Network, which works with regulated non-bank financial firms. So welcome. Then we have Nish Kotecha. He brings the financial services part to the discussion. He's the president and founder of Geosansar, and his goal is to bring services to 600 million unbanked people in India. Only 600 million. And last but not least, we are very honored to have the esteemed Duvvuri Subbarao. He's the former governor of the Reserve Bank of India. He just stepped down in September, but something tells me he's not retiring anytime soon. And he's been a policymaker and regulator for many years, and he's led major financial initiatives as head of India's bank. So welcome, and I'm excited for this discussion. I think the first thing that we really want to talk about before we really get into it is really kind of where we are now in India. Where is India now? Duvvuri, catch us up and tell us kind of the state of financial inclusion today.
Okay, the big picture of financial inclusion in India is that in India we have about 600,000 habitations, 600,000. Only about 60,000, 10% are covered by bank branches. Only less than 50% of the households have a bank account. Even where people have a bank account, that's not meaningfully used. They have a bank account because some bank has been asked to open an account for them, but that's not meaningfully used. The penetration of credit cards, debit cards, credit, insurance is much, much lower. Financial exclusion in the mountains, in the Northeast, among women is much poorer than across the population. That's the big picture, but I also want to say that we've had modest success over the last 5 years in generating a demand for financial inclusion, which I believe is the most important thing for financial inclusion, or indeed meaningful financial inclusion, to materialize.
Absolutely. Can you give us a couple of examples of policies that you've put in place that have made an impact?
I've got to be modest.
There are so many. We know there are. Could you give us a couple?
I just want, okay, I'll give two examples. The Reserve Bank, as most of you perhaps know, is also the regulator of bank. That's not a common pattern across the world, but the Reserve Bank as a central bank is a bank regulator. And in the Reserve Bank, we've used both our authority as the regulator as well as our power as a development institution. So regulatory authority combined with moral suasion to push financial inclusion. We've said that when banks open branches every year, They don't need licenses to open branches anywhere except in the metropolitan cities. So they could open branches anywhere they wanted. That was not the case until 3 years ago. We've also said that of all the branches that each bank opens in the country every year, at least 25% must be in villages with less than 10,000 population. And mind you, this is not done in a prescriptive way. We've told banks that this is what we expect you do, and they've done it. We've also asked banks to prepare their own financial inclusion plans. Not prescribed a model, not prescribed a best practice, not prescribed a template. We left it to the banks to prepare their own model, have it approved by their board and implemented, but just give a copy to us. So that, for two reasons. First, because of financial inclusion plan prepared by the banks themselves, they will have ownership over it. And second, India is such a large and diverse country that we did not want to prescribe a model. We've actually let 1,000 flowers bloom, banks do whatever works for them, whatever is consistent with their comparative advantage, and then we could mainstream successful experiences.
What's been the response of the banks?
I believe it's been good. I wouldn't say it's been overwhelmingly enthusiastic, but you know, if you compare today to 5 years ago, there is certainly much greater commitment, much greater enthusiasm, much greater awareness of the business prospects of going, the phrase that we've used over the last 3 days, going to the bottom of the pyramid. I believe that there is a much greater awareness in the banks of the business prospects at the bottom of the pyramid.
So turning to the bottom of the pyramid, Veena, I want to ask you, you're at a place where the rubber meets the road, let's say. The microfinance on the ground as it's happening. Tell us what some of your obstacles are in India so we can get a sense of the challenges that you need to reach your next 1,000 clients.
Sital, when we try and reach our next 1,000 clients, I think the biggest issue we face is that how do we really truly meet their needs? What we're doing is really giving them a loan. And I believe that the loan is really a surrogate often for other financial products. Like if you have a death in the family, you're taking a loan when you should have insurance. So we are not really able to fulfill that need of a full suite of financial products. And I think just giving a loan is, yes, you've got the outreach, you can count that number, tick that box, but it's not really financial inclusion. And the second issue that we constantly grapple with is that I think financial capability building is a very strong need to really get them to start using the products in a prudent manner. And who's going to meet the cost of that?
Right.
And if I can admit, I was one of the 12% who yesterday voted no on, is there a business case for financial capability? Because I believe that we all want to believe that there is a business case, but I don't think we found it yet.
Right. I mean, there's the issue of cost of operations, right, and stuff. So, and the other question I wanted to ask you in the panelists is there's the question of leakage, right? That's such a big issue, and I would imagine that obviously prevalent in India. What's your experience with that?
When you're talking of leakage in terms of government to personal payments, yes, I think there is a huge leakage of that. And I heard a story where, the government payments were actually coming onto a card, and they tried the experiment in a village. But the woman who has the card doesn't know how to use it. So she goes into the machine or the ATM and actually puts in her card, and it doesn't work. And there is an operator there to help her. And he says, why don't you come back at 4 o'clock and I'll see what's wrong. And what he's actually done is put a piece of paper in there so that her card doesn't work, but she's punched in her password. And he's going to take the money out, keep 20% and give her the 80% at 4 o'clock.
Oh, that's tough. We're going to hear a few more examples of that, in the discussion. Alok, let's turn to you. There's a real partnership. Financial inclusion is all about a real partnership between the private sector and microfinance. We know that. What more can the financial players do to help the microfinance players?
Frankly, I think what you say about partnership is very critical because, to my mind, the only truly good way to make it happen is to be able to deepen the partnership model. What do we have today in India is that on the one side you have the commercial banks, which have, let us say, the funding strength, and on the other you have the microfinance institutions on the ground who have a certain kind of distribution capability. Alongside, they have a much deeper connect with the clientele at the bottom of the pyramid. So that's the kind of classic partnership model which I believe we need to be working more towards, deepening it, and rather than creating rivalries and a kind of competition which is irrelevant actually. Alongside, I think the other partnership I would like to comment about is about the partnership between the government and the private sector players. A big challenge today which the country is facing is about direct cash transfers. Dr. Subbarao knows all about that. And the institutional framework for delivering the benefits through the banking network are huge. Now, same story, if you can leverage, and I was very glad about a comment which Dr. Subbarao made yesterday in the breakout session, about how do you leverage the microfinance institutions to be able to deliver more on financial inclusion. So I think partnerships are the really, truly good way to go forward.
When you talk about deepening the relationship, can you give us an example of that? Like give us an example of how one deepens, how can you deepen that relationship between private and microfinance, between government and private?
Frankly, I mean,
because it's difficult to do.
There's no simple answer to that one.
Right, right.
I mean, I think it's got to be a very layered situation where you have a certain kind of policy framework which has to enable partnerships to deepen. I mean, currently, for example, the banks cannot, I repeat, cannot, because of regulation, make NBFC MFI, which is a regulated institution by the RBI, to become a banking correspondent. Now, that limits the nature of the partnership. So all that the banks can do is to actually say, okay, we give you a bulk loan, and you repackage that into tiny loans and lend. But that's only as at one end of the kind of requirement which people have. On the other hand, if the same network could be leveraged to be able to deliver the much wider range of services, which, by the way, the current legislation in Parliament defines microfinance very nicely, very widely. It's about microcredit, it's about micro savings, it's about micro pension, micro insurance, everything. And does create a kind of an enabling framework under which, over time, it would be possible to use the microfinance network to be able to deliver the full range of banking services. I mean, ultimately, what are we saying? We're saying that microfinance is only like any other banking service, only the transaction size is micro.
I understand. Did you want to respond to that at all?
About the partnership between microfinance and the central bank or the government? Yeah, as Alok said, the government is now engaged in legislating microfinance institutions. So far, they've not had a legislation. And there's been quite a bit of debate about whether there should indeed be a legislation or not. Because when you have a legislation, you're bringing them under the statutory cover, and therefore restricting them, but also having a legislation gives some direction to what they must be doing and what they should not be doing. And there are issues about to what extent microfinance must be regulated, how prescriptive the regulation must be, because whether that will stifle innovation, etc. Right. So those are questions that we're debating with, because microfinance, as much as we use one term, it's huge. Right. There is a huge spectrum. There are, I think, about 50 large microfinance institutions which account for 90% of the business. And there are thousands of others, small ones, with limited area of operation, which account for the remaining 10%. So bringing all of them under one legislation could be restrictive, but we've got to see.
Right. Well, it's a matter of balance, right? What is the right balance of government regulation and
innovation?
Innovation, innovation.
Yeah.
Which actually brings me to Nish. So there's so many factors to microfinance, where there's payments, there's credits, savings, loans. let's talk about kind of the innovations that are needed to really push financial inclusion forward in India. Let's talk about some kind of, it's each of these, it's so many different markets and they're all unique in their own way. Can you give us like 2 concrete examples that you've seen that work?
Sure, thank you. Is my mic on? Can you hear me? Thank you very much, firstly, for inviting me to the panel and the conference. It's been brilliant. Sir has been rather modest because we talk about microfinance in India. In the last 5 years, there's been a rapid change of the structures that are used to deliver banking services on the ground. And the RBI has been a real visionary and innovator. So what we have here with my 2 colleagues is microfinance in its original form. You know, organizations acting as principal, taking on debt, taking on equity to lend out to the marketplace. But they are not able, in some cases they are, but they're not able to do it, collect savings. So is microfinance a credit-led model or a savings-led model? I believe it's a savings-led model. And I started an organization under the RBI's new guidelines of business correspondence. And what we are is a bank-led model. So we distribute products on behalf of banks. Why do we do that? And why does the government believe that is a good model? Because the government can see exactly the capacity of debt, the capacity of savings that are coming in from the bottom of the pyramid into the banking sector. With the older model, it was very difficult for them to observe and manage that risk. That was in the economy. So I believe in that model. Now, there are challenges to it, and I believe I can go into some of those, but the key point is that was an innovation. That started in 2006. Today, you have 220,000 business correspondents. That's individual outlets in India who provide banking services on behalf of a bank. We collect savings on behalf of a bank. They go back to the bank. We provide loans on behalf of a bank. The loan sits on the bank's balance sheet. So we're an intermediary between the customer and the bank, which means we are under full purview of the RBI and its guidance. You have 90,000 bank branches in India. You have 120,000 ATMs. So in less than 6 years, 7 years now, and it was a slow start, 220,000 business correspondents have been created on the ground. I think that's a real achievement and a real innovation by the RBI. You asked for 2 examples. I'll give you another one. The unique identification program started by my friend Nandan Nilkani. So this is where you have a single card which identifies you. How does it do that? It takes 10 fingerprints and 2 retina scans. It's not perfect. I've seen examples where fingerprint doesn't work and the collector says, don't worry, I'll use mine. But it's better than we had 10 years ago. So in 5 years, they've collected over 400 million registrants. Now, the aim was to have that card, not just as a nice plastic card, but to use it as KYC to open a bank account. We're not there yet. To give you an example, when the UID program was launched in January, we opened 104,000 new bank accounts that 1 month. The processing of those bank accounts has been an absolute nightmare. Now, the direction is right. A lot more needs to be done. And I always believe, I live here, so I want to welcome you all to London. But when I'm working in India, I've discovered one thing. You almost announce, start, and then figure it out. And I think that's what we've been doing. And before I close my comments, why are we all here? Let me give you an example of what a customer said. Angashwari, in 2012, one of my customers, I'm an illiterate woman who's 56 years old, and I've never been inside a bank. I don't want to go into a bank branch in India as well. Through Geosansar, I have now saved 50 to 100 rupees every week to meet my husband's medical expenses. I feel very proud. So do we.
Thank you. That actually brings up an interesting point. I think, Duvvuri, you mentioned this yesterday, is that, there are 1.2 billion people in India. And there are a lot of banks in India, but are there enough banks to serve all of those people? I think it was you that said that, in these rural places, in these villages, there's something about having a bank branch in the village. And that makes a difference, right? That can make the difference because there's issues of trust there. How do you overcome that? How do you serve all those people when you don't have the capabilities, at least right now, of having a branch, in so many locations?
It's not so much a question of capability. It's a question of banks' business model, whether they can extend operations to so many villages, whether it's profitable for them. And we've been encouraging them to do that because the message that the Reserve Bank and the government have been giving to banks is that you may not see the profit in a rural branch now, but in the short term, you might have losses. In the medium term, it's a wonderful business opportunity. And first movers have that advantage, so move on. And as I said earlier, some banks have realized that and they're doing it. Of course, some banks are ahead of others. So if there are 500,000 habitations of villages in India which are not yet covered by bank branches, it is not so much because of capability, it's so much because of business models. Right. Of course, now the Reserve Bank is in the process of licensing a batch of banks. I don't know how many. That might happen sometime in 2014. And one of the criteria, importantly, for evaluating applicants for new banks is their financial inclusion model. It was not done before. For the first time, we've said that your business model, innovation for financial inclusion is going to be an important criteria in determining whether you will get a license or not.
That's interesting because that brings us to incentives for the banks, right? To do the outreach, to do the to push for financial inclusion in these different communities. Is that incentive enough to? They can present a plan, but for them to actually go out and do it and reach out to a lot of these communities. I'd love to hear what you've seen and what.
Well, just now that is not sufficient incentive as experience shows. So we've got to combine both carrot and stick.
Right. It's the difference between a stick and a business proposition, right?
That's right. Because in the heart of Mumbai, where the Reserve Bank has its office. Every commercial bank in the world has a branch within 1 kilometer radius of that. But across hundreds of thousands of villages, there are no banks. And banks don't want to go there. Yeah. Okay? So there is a question of an incentive. And we've got to use both carrot and stick. And the carrot has been to tell them that, look, if you open so many rural branches, we will give you permission to open a branch in Mumbai. Okay. The stick has been that if you don't do this, we're going to look askance at you when we supervise you. Okay. Mm-hmm. So far it's been a combination of carrot and stick. Hopefully we can withdraw the stick and the carrot itself will spur financial inclusion.
Veena, I think you wanted to say something.
See that I would just like to respond to Dr. Subbarao to say that you're talking about the branches in Mumbai. We started our microfinance operation in Mumbai, and believe me, 60% of the city is not adequately banked. They may not be totally unbanked, but they're not adequately banked. And coming back, I mean, we have 40,000 customers in Mumbai, and we could get a lot more, and I think Sir would know that. But I think what that brings me to is, again, to say that I think it's not a question of banks versus other institutions. It is a question of partnerships. And I think to enable those partnerships, perhaps something which came up in the breakout session yesterday as an experience from Nigeria is that we can have differential regulation for non-banking financial institutions, which is based on their capital and their size. And so if you have limited capital, you can operate in one state. Greater capital, you operate in multiple states. And I think one of the questions which has now been coming up when the legislation is in Parliament is the fact that is there adequate capacity to regulate the large number of institutions which would actually come under the ambit of the legislation once the legislation is passed. And I hope that one of the considerations can be given is that you can do it in a differential manner, And apart from, just imposing maybe very stringent prescriptive norms for, microfinance institutions or other institutions, is to have a balance between, say, a consumer protection group which is run by an SRO or the market, and such differential regulation for non-banking institutions. So just a suggestion, because I know that you would not retire, you would be very much active in...
This differential regulation for different NBFCs, that's a good idea, and it's not new, it's been debated for many, many years. It's an active issue in the Reserve Bank that those NBFCs which are small or lightly regulated, those which are big, operating in several states, are more tightly regulated. That makes sense, it's rational. But the problem is political and problem is human. Even if a small NBFC in one corner of the country fails, the question to the Reserve Bank as the regulator is, what have you been doing? Were you sleeping? So you just cannot say that this NBFC is lightly regulated, so even if that collapses, we have no responsibility, or we have lighter responsibility. That's not an acceptable answer. The Parliament hauled it up when one NBFC, for those of you who are not familiar, NBFC is a non-bank finance company, in West Bengal failed. It had a furor all over the country, and we were hauled up before the Parliament. And if we had said that, look, we were only lightly regulating it, that would not have been an acceptable answer.
Alok, did you have something? You look like you want to chime in.
The only comment I'd like to make is that I think we must not walk away from the complexity of the landscape we are dealing with. Let's talk about the availability of bank branches and so on. In Mumbai, it is true that within a kilometer radius of the central bank, there would be probably 200 bank branches. But the question is, whom are they actually designed to serve? And we often tend to miss that point. The fact of the matter is that all across in lots of urban areas, and Veena, in fact, is working in an urban market largely, the physical infrastructure, the bank branches do exist. But are they connected to the clientele we are talking about? Are they able to serve that clientele or not adequately is the question. I can say this for a fact that if her maid, my maid, somebody's driver, people belonging to a certain socioeconomic strata, walk into a regular bank branch, are they welcome? No, they are not. Will anybody even look at them in terms of saying, okay, what do you want? What can I do for you? The answer is no. When they say, look, I want to, let's say, open a bank account, they will ask for 7 pieces of paper, even if the RBI actually prescribed only 2. So while the RBI rightly will say that, look, we have simplified the KYC norms, but on the ground, what is the reality is a very different story. I can say personally for myself, I walked into a bank branch and said, I want to open a bank account. They asked me for 7 pieces of paper. I say, look, the RBI's regulations are only 2 pieces of paper. They say, no, our internal requirements are 7. End of story. Right. Now, this is somebody who's been a banker for 30 years. Now, imagine what will happen to somebody else who has no good sense of how to actually deal with bankers on the other side.
Right. Well, that brings me to something that, Duvvuri, you said financial literacy and financial inclusion are integral, right? But financial literacy is so tricky. Even in the US, financial literacy is challenging, right, to engage people in that. So how do you lay the groundwork for something like exactly what you're talking about?
Well, it's a complex challenge, as you said, and even in rich countries, financial literacy is a problem. We were talking about it in the breakout session yesterday. I believe in the US, they polled people, moderately educated people. They said that you put $100 in a bank account, yields 2% interest per year. At the end of 5 years, how much money will you have? Less than 102, 102 or more than 102. And 50% of the people could not answer that question. It's so simple. So, people have a mental block about financial literacy. In poor countries, it's much more of a challenge because educating people on financial matters that means something to them has to be done, as we were talking about in the breakout session yesterday, in the context. You can't call them for an evening class and say, look, I'm going to teach you financial literacy. You've got to tell them about financial literacy at the point when they're actually contracting something financially. But let me tell you a story which I said yesterday, about who is financially illiterate. Which is, all of you heard of Seva in Gujarat, where you're from, and Ila Bhatt. She writes in her book that she took a woman entrepreneur to a bank, negotiated a loan on her behalf, and they sat across with the branch manager. The branch manager, through questions, interrogated her for about half an hour, all sorts of questions about her business. And Ila Bhatt was getting frustrated about where this was leading. At the end of half an hour, she said, I realized that financial illiteracy is on the other side of the table. So, it's not who is financially illiterate. Do we, as people who are champions of financial inclusion, are we financially literate enough to understand poor people?
Right, exactly. Yeah.
I think our mantra has always been financial inclusion equals education plus access. And if you provide the education some other time, some other week, some other process, at night, in the morning, it's like saying someone who is aspiring to have a bank account, isn't it a good idea to have a bank account? Good luck in getting one. What a pointless subjective. And more than that, frightening. They're aspiring. They know what it is. They're not illiterate in the sense of financial. They're smarter than all of us. They have to be. They manage their money in cash. We can't do that. Now, if you provide an education, you say it's great to have financial services, and you do not have the capacity to provide access to those services, what are you doing?
Right, exactly. And I want to turn to the audience and get some Q&A, but the one interesting point is, so you provide financial services, you want to extend financial inclusion, but getting beyond money transfers, it's all about financial, how do you get people interested in credit, having a savings account, getting into a loan and all of that stuff. I mean, it's very complex, but I'm going to let the audience get a chance to ask you some questions. If anybody has a questions? They're astounded by all this inspiring talk, but I'm going to continue my questions.
Maybe I just say something. One of the problems we have faced in providing financial capability is really finding the business case and raising adequate funds. And one of the things which struck me at this conference was when Professor Sital said that this is an emotional issue. Financial inclusion is as important as maybe, getting the next meal or getting primary education. And I thought that's a great idea. I need to go out to the sponsors and appeal to those who say, I'm going to fund primary education and hunger, but I'm not going to fund financial inclusion. So maybe we'll get a change there.
Yeah, absolutely. Oh, there's a question right over here.
Can you tell us, financial inclusion, we talk about opening more and more of the bank accounts at very large numbers and using the business correspondent too. Are we also going to accept that perhaps there needs to be thresholds, materiality, in which case many bank accounts, as you know, opening, Alok alludes to the 7 documents or so that are required, that we have a simplicity and perhaps an abbreviated way to open accounts that have thresholds that will not have limits above a certain amount. In other words, to facilitate the opening of large numbers, but still address the concerns the regulators would have. Is that a part of the discussion too?
Absolutely. It's been done already. We used to call it a no-frills account. Now it's called a basic account for less than 50,000 rupees, and I believe there's some restriction on the number of transactions per month. Yes, for that, no KYC is required. It can be done on self-introduction. Again, there is a gap between what the Reserve Bank prescribes in the practice, but on paper at least that's done, and I believe that a lot of basic accounts have been opened.
Just to add to that, if I may. So on the ground, head office of a bank may agree with you. The branch manager, which is where the account is actually registered. So if you think of me as a business correspondent, one of my agents would link to a local branch of State Bank of India or Bank of whoever. That branch manager is not aware. And it ultimately falls to me and my staff to go around to the branch manager with a bucket load of documents and say, look, the interest level, 0. As far as he's concerned, if he doesn't do full KYC, it's a real challenge. Now, that education is getting better, but it is a small fraction of 100% understanding of what a basic account is and how you open it.
I would slightly disagree with you, Nish. We have currently a partnership with Airtel, which is the leading telco. And when we started out with that partnership 6 months ago, we were facing actually a similar problem, but with the telecom regulator, not with the RBI regulations, because of the use of phones even for terrorist activities. But I would, I'm positively have a positive impression to now give that the two regulators have actually agreed on a basic documentation for an account, and we can open an account in about 2 or 3 days, which sits on the mobile wallet. So I think, yes, education is involved, and we have to do it as providers, but I think it's moving in the right direction.
So that's very positive. I think we have a question over here.
So we've had discussion about banks, we've had discussion about non-banks. I wanted to bring up the cooperatives in India, both the primary agricultural cooperatives and the credit societies. The urban cooperative banks are already under your purview, but those other two groups, the primary agriculturals and the credit societies, they're not regulated right now by RBI. They collect deposits for roughly about 150 million people. And those deposits aren't insured today. And so what is it, how can RBI reach out further without closing down these institutions that are an important part of inclusion, but yet giving them more access to payment system and deposit insurance?
And Sital, I believe there's one last question over here, so perhaps you could hear that one and that will close up the Q&A.
That sounds good, thank you. Go ahead.
Hello, my name is Scott Brown. I'm CEO of Vision Fund, which is World Vision's microfinance arm, and we have a small operation in India. One of the things I'm encouraged by is the tremendous technology that is dropping the costs to rural farmers, et cetera. And that's really exciting. But even with that, as we do our business cases, we find that under the current structure of caps, we're not able to really start up any new operations in the north, which is where the biggest opportunity is and the biggest need. And so I'm curious as to what you folks are doing about that, because what we are seeing is that the money lenders are stepping back into that breach, and the rates have gone skyrocketing. So what is your view on being able to influence the government to say we have to have some sort of structuring where new entrants can come in, and until they build up scale are allowed to have a certain higher rate or a cap, after which time they've built up scale and could go down. But right now there is not sufficient competition. We're losing a lot of MFIs in the market as a result of that.
Would like to start on?
Oh, thank you. About cooperatives, I completely agree with you that cooperatives are an important part of the savings and credit system in India. The cooperative system is regulated by the Reserve Bank, but not supervised by the Reserve Bank. Only the urban cooperatives are supervised by the Reserve Bank. The rural cooperative system, which actually performs a very vital function, is supervised by NABARD. So it's not as if they are unsupervised or unregulated. That's a different model of supervision and regulation as distinct from that of commercial banks. They have a far greater reach than do commercial banks, but they have their own problems about scaling up. There are problems about political intrusion into the cooperative system. So those problems have been with us for 50 years, and Some of them have been resolved, but we've got to work on the cooperative system because it is the lifeline for millions of small farmers across the country.
Did any of you want to add anything on to answer this question?
Manfred?
The way I would see at a big picture level, there is a trilemma which we are dealing with actually from an architecture standpoint. What you need is scale. India is a huge country, 1.2 billion people. B, you need specialization because to be able to connect with that end of the market, unless you have specialization, it's not going to work. The regular mainstream banks are in fact failing on that account because they're not designed, not structured to deal with that clientele. So you have scale requirement. Now the commercial banks have scale but don't have specialization. The microfinance companies have specialization but don't yet have the scale because of a bunch of reasons. And without these two, you can't get sustainability. So this is the trilemma, I think, which we are dealing with, how to be able to create an architecture which is able to provide scale, specialization, and sustainability, therefore.
Right, to make that dent in 1.2 billion people, right? I have one last question for the panelists to really wrap this up. I'd like each of you to just talk about just one thing in India that is doing well when it comes to financial inclusion that the audience can take away.
I don't know about doing well, but what's heartening as far as I'm concerned is that the message of financial inclusion is catching on and there's demand for financial inclusion. I tell this story, I've told this story before. 40 years ago when I joined the civil service, in villages across the country, when parents are looking for a groom for their daughter, one of the important considerations then used to be, is the village where the boy comes from, does it have a drinking water source? Because if there's no drinking water, they were condemning their daughter to a lifetime of drudgery. 20 years ago, the consideration was, does the boy's house have a toilet? And today, the question is, the consideration is, does the boy's household have a bank account? It's not how much money there is, but do they have access to the financial sector? And I wish this question and this aspiration catches on.
I have a connect with that story, and I look at financial inclusion both in terms of employees and clients. And I think what really makes me happy is when we started out, it was really hard to get employees because we were in the center of the financial hub, and attracting employees away from formal financial institutions was hard. As well as once we trained our employees, they were constantly looking to go into the formal financial sector because they considered the MFI sector to be still something a little apart from it. But I now have employees saying, I work for an MFI and my equity in the marriage market has gone up. So that's the connect I have.
Fantastic. There should not be any takeaway from this panel to say that India is not doing well. The reason I went back to India to build a business correspondent is because of a vision of the RBI. Look, India is about to license new banks for the first time in a decade. And the idea of the RBI has stated is we now want to get into a situation where we're issuing rolling bank licenses. Now, a microfinance institution that takes savings and gives loans is a bank. How you regulate it and so on may be up for debate. As part of the new bank guidelines, the RBI has stated that a key element of consideration of granting of that license is financial inclusion. A key element of granting of that license is financial inclusion of a bank that is looking at mainstream banking. Who else is doing that?
I think the great news is we are talking a lot about it. And we have committee after committee, and we talk a lot about it. The fact is, it is very much top of mind with the policymakers. And being top of mind, and given the fact that inclusive growth is so central to our entire public policy and approach to economic development, we will get the answers. I am very optimistic.
Well, fantastic. That's a great note to end it on. I just want to say, the themes that I've heard during this discussion is it's about balance. It's about balance and partnership. between the private sector, the public sector, microfinance, government. There's a lot of that, and it's a lot about deep relationships. That's what I've heard. And it sounds like we're on the path to financial inclusion, the roadmap, shall we say. And I just want to thank all of you for your efforts to push us all forward. And I guess we look forward to full financial inclusion by 2020. So thank you. Thank you.